Okay, so picture this. A major conflict breaks out, and investors everywhere are scrambling for safety. But gold, literally the oldest safe haven in the world, is actually falling in price. It's a complete paradox that seems to fly in the face of decades of financial wisdom, and we're going to dive deep and figure out exactly why.
So yeah, that's the big mystery here. For generations, the rule has always been super simple. Crisis hits, gold goes up. But that's just not what we're seeing this time around. So what on earth broke the golden rule?
I mean, just look at the history, right? The 2008 financial meltdown, the COVID-19 pandemic, the start of the war in Ukraine. In every single one of those crises, the price of gold shot up as people rushed to safety. But this time, it's the complete opposite. The West Asian conflict kicks off and the price takes a nosedive. It's a total flip-flop of everything we've come to expect.
And here in India, the drop has been seriously dramatic. We're talking about the price for 10 grams of 24-karat gold plummeting from nearly 1.9 lakh rupees all the way down to around 1.3 lakh. I mean, that is a huge chunk of value just gone. And it's left a lot of investors scratching their heads.
All right, so to really get to the bottom of this puzzle, we've got to go back to basics. Let's revisit the old playbook. Why exactly has gold always been the go-to safe asset for decades? Okay, so the most important thing to get here is the constant battle between gold and other safe assets, and the main competitor is government bonds. Think of gold like a vault. It holds your wealth, stores its value, but it doesn't pay you anything to own it. Bonds, on the other hand, are more like a savings account. They pay you a steady interest. So investors typically flock to gold only when the income they could get from bonds is really, really low.
And that brings us to gold's two best friends, low interest rates, which make those income-generating bonds look a lot less appealing, and a weaker US dollar. You see, gold is priced in dollars, so when the dollar is weak, it's cheaper for people using other currencies to buy gold, and that pushes up demand. In pretty much every past crisis, these two factors have worked in gold's favor.
But here's the thing. This time, everything is different. This is where the plot totally twists, and the current crisis just rips up the old rulebook and throws it out the window.
So here's the chain reaction, step by step, that broke all the rules. First, the conflict sends oil prices through the roof. Boom. Then, all that expensive oil fuels these massive fears about inflation. The cost of everything going up. So what do the markets start thinking? They expect central banks to jack up interest rates to cool things down. And just like that, those boring old bonds that pay you interest suddenly look way, way more attractive than gold, which pays you nothing.
And hey, don't just take my word for it. As Kavita Chacko from the World Gold Council points out, it's the expectation of what central banks are going to do that's the key factor here. The market doesn't even have to wait for the banks to act. Just the belief that interest rates will stay higher for longer is enough to pull money out of gold.
And as if that wasn't enough, you've got other forces piling on and pushing prices down. With stock markets also tanking, some investors are forced to sell their gold, which has been profitable for a while, just to cover losses in other parts of their portfolio. Other people are just deciding to cash in their chips after gold had a massive 2-year run-up in price. And all this selling starts to snowball, because as the price drops, it triggers these automatic stop-loss orders, which then floods the market with even more gold for sale.
So this brings us to another major player in this whole drama, the US dollar, which has suddenly re-emerged as a really powerful competitor to gold. For years, all we've heard is how countries around the world are trying to diversify, to move away from the dollar. Its share of global reserves has fallen from over 70% down to below 60%. But that's the long game. What's happening right now, in the middle of this crisis? Well, that's a totally different story. Because here's the kicker. Even with that long-term trend, a full third of all global trade is still priced in US dollars. When a crisis hits, and especially when oil prices go crazy, the world still needs dollars to pay its bills.
So what happens when there's an oil shock? The dollar becomes king. The expectation of higher interest rates makes holding dollar assets more attractive, which strengthens the dollar. And a stronger dollar, in turn, makes gold more expensive for anyone trying to buy it with another currency. For now, at least, the dollar is winning the safe haven race hands down.
So does all this mean gold's time in the sun is over? Is its reign as the ultimate safe haven done for good? Well, not so fast. Let's zoom out and look at the long-term picture, because that's where the story gets a lot more interesting.
You want to know who's still buying gold? The big guys. We're talking about central banks.
Sure, their purchases might have slowed down a little bit in 2025, but they were still way above the historical average, and they came roaring back in early 2026. See, they're not worried about the day-to-day noise. They are playing the long game.
And this is the #1 reason why they're still buying. After everyone saw what happened with Russia's foreign reserves, how they were just frozen, governments had a wake-up call. They realized they need something that's truly secure. Gold is a physical asset. You can hold it in your own vaults. You can't just freeze it or wipe it out with a keyboard. It's the ultimate geopolitical insurance policy.
And it's not just the big government institutions either. Even among everyday investors, that underlying belief in gold is still there. If you look at a huge market like India, investment money flowing into gold funds stayed positive for the 10th month in a row, even while prices were going wild. That tells you that a lot of people are still believers, and they see these price drops as a buying opportunity.
So that's where we land. It's this incredible tug of war, right? On one side, you've got these short-term forces, interest rates, a strong dollar, pulling the price down. And on the other, you have gold's fundamental, long-term appeal as a physical, sanction-proof asset. So yeah, this crisis created a wild paradox. But the final chapter on gold's story, it's nowhere near being written.
You can download the complete notes of this video from the pinned comment below. If this video helped, do like and subscribe to the BriefCase for daily visual explanations.